Ashish, good morning and thanks a lot for joining us. After a couple of days, we're seeing a little bit of green on the screen, on the back of what happened with Jerome Powell making the statement that perhaps we'll see only a 25 basis point cut in March. What is your call and how you would approach this kind of market? Because overall, we do still have all of the geopolitical tensions and we've been seeing wild swings come through even intraday.
Absolutely. Morning to you and all the viewers. See, if you look at the overall direction of Nifty, we are seeing a very big move, especially with gaps. So there is a 300-point gap down or a gap up, and that is how the markets have been moving. What is comforting is that the 24th Fab low, which is at 16,200 when the first invasion news came out, Nifty is still protecting that low so far. So that's a positive sign. But on the other side, if you look at Bank Nifty has continued to drag on the downside. It has been nearly, I think, 9 or 10 days where Bank Nifty has not closed above the prior day's candle high. So that remains concerning, and Bank Nifty is not showing any kind of bounce back also from here. So that remains a concern. Having said that, I think the overall trend for Nifty and the market is going to be range bound. Stock selective picking can be done. For Nifty trend to be turning on the positive side, we need a decisive break above 16,800. Once that gets taken out, we can say that there is some kind of positive momentum generating on the upside. And the support is at 16,500, which is also the highest OI level. So in a nutshell, we can continue to move with high volatility, but in a range with 16,800 and 16,500 as the range for now.
Okay, what about individual stocks, Ashish? What is it that is on your radar today?
The first stock on the buy side is going to be GMDC. We can clearly see that the stock is strongly outperforming, and the sector as a whole, we can see that the commodity space is buzzing, the metal mineral space is buzzing. So that is a very good sign, and the stock has continued to touch the 52-week high when the broader market has collapsed. Nifty is down by more than 10% from the highs. This has continued to touch new highs with a good volume. So there is a good breakout in GMDC. One can create long positions here, keeping a stop loss of 144 for the target of 161. And the next stock on the buy side is going to be Lemon Tree. We can see that the stock was consolidating for some time. Today, there is a gap of opening. A follow-up buying is emerged. The volumes are good, managing to bounce back from that 20 days and 10 days moving average with a positive crossover. So everything looks in sync for it to move towards the level of 56, which is the target for Lemon Tree. Stop loss can be maintained at 50.30.
All right, Ashish, thanks very much for that quick break for now. Up next, we'll talk about the